Hey, welcome back to the channel. This is Doug, the retirement guy. We have a video today on Yieldmax's ETFs, the weekly dividend ETF review of all 10 of their funds. Plus, we issue a cash cow and we give you our top 4 picks. We do this every Wednesday so we can get you the information so you can make your decisions before the stock market opens. If you're a Patreon supporter, thank you and welcome back. All of this information is on Patreon, normally by 8 o'clock every morning. So if you're sitting there, need information, what to do, what to buy, we kind of try to give it to you. Now, if you're a subscriber, thank you. But if you're not, don't be afraid to hit that like button. Also hit that subscribe button. Join the community. We're trying to be one of the fastest growing sites on YouTube. So let's get into today's video. Notice to all viewers, past performance does not guarantee future results. If you're trying to make financial decisions, always contact a licensed financial advisor or a professional before making those decisions. This video is for educational and informational purposes only. So let's take a look at the growth of the funds this week. And actually, Yieldmax had a good week for some overall growth. Our number one that we're going to look at is LFGY, the crypto program. This one wins with a 6.02% increase for the week. So as long as we have some nice volatility in crypto, the fund has grown, everything is done very well. So we're very pleased with this one. And when you take a look at it, we are now basically above the 4-week moving average. So we're about 40, 50 cents above the moving average as we are right now. So it's moving definitely in a positive direction as we can see forward. The 30 days, even it's up over in the 30 days. So we're very pleased with that side of it. Our next one that we want to talk about, of course, is going to be into the CHIP, CHPY. This one was up 2.75% this week. It is above the 4-week moving average. It's got a 1.3 through 30-day positive, and it's also got a 14.86 year to date. So this one, I always say CHIP just is a steady, steady, steady mover. The semiconductor portfolio has been doing very well for them, and it's always paid out very well. Nice growth across the board. So those are our 2 big winners for the week. Now we're going to take a look at a couple of losers. Well, the first one, guys, I'm going to tell you is SLTY. SLTY is doing exactly what most Yieldmax funds do when they first come out, and they drop, and they are dropping. This thing is down 12.39% year to date. So since they opened up, it's down. You can see it's down to $43.99. I know a lot of people out there are going to be upset. They're going to put some negative comments in the books. But you know what? We live off of positive comments on this stuff, and we tell you the truth. At $43.99, this thing is going to continue to drop down. Will we get down to the ULT price? I don't know. But you just got to give this thing time for it to settle, and it's not worth being invested into it as of yet, in my opinion. This thing's 4-week moving average is 47.27, and you're already $4 below that. So you've lost 7.73%, 12.39% year to date. So it's just, again, it's the slippery slope of Yieldmax, starting at a very high price and dropping down. Even that they're doing the shorts, even that they're trying to find, the things that are running in the negative zone, they still are not able to hold the prices that they do. The other one down was the Russell 2000 zero DTE covered call strategies, RDTY, down 1.37. That one's coming down to, like you see, just a hair below its 4-week moving average. So it's about right where it's normally going to play. Now, the big popular one out there is ULTY, and that one came in at, it's actually up to $5.63. We just did a video on this one, and you know that the price of this one is supposed to be pretty much in that $5.60 to $6 range forecasted for the next 3 months. So it's falling right into where it's supposed to be. And you look at the 4-week moving average at 5.68, so it's still just down a little bit. So, it's holding its own ground. So let's move on to the next thing. How did they do in dividends? And when you take a look at the dividend side of it, Well, our winner of this week is going to be SLTY because it paid out the most at 55, basically 55 cents. Now, we're going to mark this thing as being down, but I almost want to call it flat because of the point that the two are operating with. We're talking 1/1000th of a cent difference. So, but still classifies by the computer being down. The second big one that we had was LFGY again, so the crypto. So they have nice growth and they've given you a nice dividend of 46.02, and that one's definitely up. We move over to the distribution rates and you get into that's where ULTY wins the game at 85.6 year to date distribution rate. So they're doing a very solid job of continuously doing what they said they've always would be doing, and that is focusing on income, giving you as most positive income as you can. The second place goes to LFGY again at 65.5, and Salty SLTY comes in at 65.24. Now that one only being out for 4 weeks, it's still giving you some decent solid numbers. If they can continue giving that 55 cent, it could be a nice winner once the price settles down. Looking across the board at all the distribution rates, we can go down this all day long. Yieldmax, Yieldmax has been always the quiet runner at 52.16%. The other thing we'll now look at is the return of capital. And you can see the top five are all 100%. SDTY came in at 78. Salty came in at 96.56. ULTY is 100%. Not shocking. And YMAG at 13.60. So they did some decent jobs there. And YMAX at 62.67. Why does this matter? Well, this kind of is your couple different things. One is your tax advantages that they're doing it with the return of capital. And I think a lot of these are done this way. This time of year, they will do it for the finances, for the taxes purposes, and so on. But some of them, and I believe ULTY personally was one that did not cover its goal to get to the new distribution that they did. But overall, nothing to panic yet with what's going on with the distributions. So let's take a look at the dividend payouts, and this is going to give you the assets under management and the percentage of the current price to what the new dividend is. Now, I'll explain to you why this means anything to it. Basically, right now is at $5.63 on ULTY, paying 9.26 cents per share. That is basically 1.64% of the share price. So if someone was to just jump in today and buy stock and buy something, ULTY, you're going to get basically 1.64% in buying the dividend and then basically selling out the dividend. So what it shows you is that it's a very solid cash piece, and this is why this will be our reward for the week, and that is the Cash Cow Award will go to ULTY. Because of that 1.64 fund price, they have done extremely well in continuously paying that dividend. When you look at the rest of the funds, the next one that comes even close to it is LFGY at 1.26%. I'm a guy who sits here and always says the same thing. If I can buy something above that 1%, I'll definitely do that. I watch this on a regular basis, and I'd like to see anything over that 1%. It's worthwhile putting some money investing into it. When you start getting that 1.5 to a 2%, then that's where you want to jump, snag some hard dividends, and then get in, get out. Now, the assets under management, there's only one that's really bothered me, and I did this in the video yesterday with ULTY. And, some people question different things, but when we did the video, the assets under management dropped 10%. This thing was up to $3.3 billion under assets management. It has dropped down to 3.04 now. As of this morning, it reported at 3.24, so they did gain some of that back. What this does, though, is when you see an asset under management dropping and you see 100% return of capital, that means they're digging into their piggy bank. That means they're turning around and selling some of their funds, some of their stuff that their call options were bought up. So they're losing some of that assets under management. Plus, you have to question how much of that is going off to pay the dividend. But when we see the thing going up to that 3.24, it means the management is either selling more funds, more shares, or they're balancing getting back into the game of holding some of those things back. So I'm not panicking about this. It's one of the things that you should always be looking at. No matter what you do, you should be always looking at the assets under management. Watch that number. It tells you what stock or what direction the fund is going, up, down, sideways. Not the price of it, but what the value behind the scenes is. So you always keep an eye on that one. So our next one for all the return on investment investors. So this is basically if you bought a stock today, if you bought any one of these funds, and your 4-week moving average versus the current dividend that was basically being paid. And what we actually changed here is not just the actual dividend, we're actually using all averages. So this is an average of the dividend with a 4-week moving average to give you more realistic what your return on investment would be if you bought into this fund. So the number one winner right now is ULTY at 59 weeks. So basically 1.13 years. So it's a very solid number that basically in just a hair over 1 year, you would have your $5.68 back into your pocket just from dealing with the average of the dividends coming in. So that's a strong return that you can get in. And then that becomes a true cash cow because you have nothing invested into it. And all you're doing is collecting your 9 cents, 10 cents week in, week out and stashing the cash. And then you can take that money and put it into something else that can help you continue build your second cash cow and just grow your portfolios. After that, we take a look at this. Everything now gets into that 1.37 for LFGY and 1.51 for Salty. But I will always put the warning on Salty right now. It is too new of a fund. I still am not one who's going to jump in on that one. It's going to take me probably 3 to 4 months before I see that thing settle down or the price can kind of tell me that the price is going to settle down. So we're really on top of just watching out for Salty that we're not ready to make that move yet. So LFGY would be our second one. So anything to me, anything that's under that 1.5 years is definitely something that you want to seriously investigate, put some time into it, find out if this is a fund you want to be into, and move forward. That's why you look at the YMAX at the bottom. Didn't get the highlights, but it's sitting there at 1.59 years or 82 weeks. So that's a fund that you definitely would evaluate and say, do I want to be in YMAX? Is that where I want to be? And learn about that fund before you make your investments. So very strong pieces here. And you can really select out which ones you want to be a part of. So now here's the one that we've added to this is the year-to-date returns. This is what the real numbers are all about. I always say this to people when we're talking on the phone or different things is the whole thing comes down to is what is your total return? You can sit and brag and tell me all you want that ULTY, I make 85% distribution on that. Well, the true answer to it is you're not making 85% because you have to take out the NAV erosion that has happened. You have to take out what you've lost in the gains. This is like going to Vegas and saying, I won $10,000 on the slot machines. Well, how much money did you put into the slot machines? So the number one winner right now is CHIP, the semiconductor program. It pays that 40% distribution rate year to date. And then it also pays a year to date growth that's been up to 14.86%. So that gives you a total return of 55.03%. So CHIP is actually our number one returner right now. We move to number 2 in the yellow, and that's going to be Salty. Now they're paying at 65.24% distribution rate. Now they're down 12.39. That's only in 4 weeks, guys. And they're at 52.85%. So 2 things are going to happen is the share price continues to drop. You'll see the distributions drop, which you'll see the year to date grow in a negative factor and probably balance out. This is why, again, I continue to say this is a 3 to 4 month time frame that you have to wait before Salty finally gets to where it's supposed to be to make any good decisions. So the third place is ULTY, paying at 85.6%, down 37.24% in growth. And if you look at that, they are the number one loss of NAV erosion. They're the number one losers in the market, and they're still pulling at 48.36% total return. Now, with all the negatives I just gave them, 48%, you really can't complain about that one. They do a very, very good job of that, paying that income. We're working on another video right now. Is there better income producers than ULTY? And wait for see that solution that we come up with on that is give you an answer as a yes or a no, or possibly some other options. So wait for that video. Probably, I believe that one comes out tomorrow. So we give you a little sneak peek on that one. But you're going back with this one at 48.36% total return. So I'm going to give you guys our top 5 or top 4 picks that we like, that we would love to see, investments. That's where we're putting some of our money into it. And at number 4, we're putting it into GPTY. We believe that this is a solid, good income, paying you that 40.9% with only a downside of about 7.81% for a total of 33.09. We like the AI category. We like that side of it. We think that's going to continue to grow. It's really being pushed. I think it's the new technology that's out there. So I think that's one that we're going to basically keep an eye on, that we're going to invest some money into. Number 3, YMAG. This one, I'm telling you guys, is I'm still on the surface. I know Jim Cramer's talked about it. I've seen a lot of reports onto it. The Magnificent Seven. They've had a quiet year, but I think they're just waiting to explode. Personally, I think they're all getting themselves how they're going to handle AI, what they're going to do with AI, where they're trying to get things organized so that they can go aggressively go after it. And this one here, when I look at the fund numbers, you're paying 45% distribution. Yes, you've lost 17.51% year to date, so your total return is really 28.24. I think in the fourth quarter of the year, this thing is going to start to show some huge growth, and you're going to start seeing cutting into that year-to-date growth negative number to kind of turn that around to some positives. I don't know, but I believe you're going to see some volatility out of that market, which will definitely give you some distributions. Number 2, well, definitely has to be ULTY. I know the last video I did was a little down on ULTY, and I still am not. I would not put all my eggs in the ULTY's basket. I've kind of gotten to the point where if the forecasting tells me that we're doing the right thing, we're probably going to hold until we get to that $6-7 price range. Right now, bouncing in that 560 area, I'm sitting back collecting my chips. I'm collecting my income, and that's why I put it on there. This is for income purposes. I'm going to collect my 85% distributions. I'm going to collect that, but I'm not going to put any new money into it right now because I just want to continue to collect my distributions. If I start to see that thing start making a change, going towards that new focus that they said is about 12 months out to that $6 to $7 range, then I'll probably start being the late one on the train and try to grow my portfolio at that time. But right now, I'm going to sit tight. Our number 1, though, where I'm going to be ending up this week, will be putting more of my money into again, and that will be number 1, CHPY. I just like that semiconductor program. I like everything I've seen so far this year. 9 months going into this thing, it's given me strong positives, give me that big 55% total return. I believe that one's just going to stay a strong piece, because no matter what you do, if it's the Magnificent Seven, if it is the AI package, everybody needs those semiconductor chips, and that's where we want to put our money this week. Guys, it's Doug the Retirement Guy. I hope you like what we did. Hit that like button. Also hit that subscribe. If you're not part of a member, this is what you get every single week. We're constantly helping you try to grow it. And then we have all the funds. We do the Roundhill, we do the Granite shares, we do Rex shares, we do Defiance. We are doing all of this so that you can stay well informed. If you have any comments, put the comments down below. We listen to them and read them all. And also, if you can help support the channel, hit that Patreon button down in the description. And the final push I'll ask you for is check out our other channel. That's Doug the Retirement Guy with the monthly ETFs. And that's where we do the same thing we're doing here, but we do it all monthlies versus just weeklies. So kind of give you a separation between the two. Guys, I appreciate it. We'll see you next week.